Today, let's talk about something maybe many people have never heard of it, but the market is so big that it's a bit scary. It's called private credit, some say. It is the future of financial innovation, but some people warn that it may be the tipping point for the next global financial crisis. So what exactly is it for our investments? What does it mean for the future economy? Let's uncover this value together, the mystery behind the multi-trillion-dollar market. Let's look directly at a number, over $2 trillion. You may not feel anything about this number. Then let me put it another way. Still remember that scene in 2008? The financial tsunami that almost brought down the whole world? The subprime mortgages that sparked the storm. The total size is approximately $1.3 trillion US, and the market we are talking about today, nearly twice as big. Yes, you heard it right. Twice as much. Just hearing this, I think that alone is enough to make us sit up and pay full attention. And this isn't some distant academic discussion. Just recently, the world's largest asset management company, BlackRock, you must have heard, they suddenly did something: restrict investors from one of their major private credit funds take money out. It's a bit like you suddenly heard that in front of a certain big bank. People are starting to queue up. As soon as this warning came out, the overall market atmosphere, it suddenly became very real and tense. Okay, here comes the question. This suddenly came out a market that's so big that it's a bit unsettling. What on earth is it? Where did it come from? Let's take a look now. This so-called new field of finance, to put it bluntly, private credit, is some institutions that are not banks, like that big investment fund, lending money directly to the company. You see, the whole process does not go through the open market. It also bypasses the strict supervision of traditional banks. So many people also call it shadow banking. It sounds very mysterious, right? So how big is the plate in this market? Now everyone estimates there are about $3 trillion in the world. 3 trillion, the number itself is astonishing. But what's even more worrying is the rate at which it's growing. Do you know this giant balloon blew up? In just a few years, it's big now. If it breaks, I dare not imagine the consequences. You may be curious, why is this happening? Why is it rising so fast? In fact, there are three main promoters. First, think about it. After the 2008 financial tsunami, government regulations on banks have become extremely strict. Naturally, banks don't dare to do risky business. Second, the banking industry itself has been consolidating, transformed into several huge behemoths. They only like to make standardized loans. The needs of many mid-sized companies are ignored. That last and most crucial point, interest rates have been extremely low over the past decade or so. Investors pursue higher returns. I have no choice but to put my money in places like this. The sum of these three factors that propelled it all upward. But the interesting thing is, some people don't see it that way. Some people think that this market is not a bomb. On the contrary, it is a financial stabilizer. Does it sound counterintuitive? Let's hear what they say. So who should we believe? How serious is this risk? This is all Wall Street right now, regulatory agencies in various countries, and us investors. The question I want to know: most supporters will take this sheet and tell you, look at private credit funds, not the same as a bank. Their money is locked up, capital from investors. In plain terms, this money is tied to the contract. You can't just take it if you say so. A bit like a fixed deposit, this is like a bank current deposits that everyone can collect at any time. The risks are completely different, less likely to cause a run, and they play with financial leverage, also relatively conservative. Look at this picture of the Federal Reserve. It's important. It tells us when banks lend money to these private credit funds, they all got the best collateral. It is called the first secured claim. Meaning, what if something happens? The company that borrowed money collapsed. The bank is the first person in line to get the money back. It's because of this layer of protection. Many experts think even if there is a problem with personal credit, it shouldn't be a problem that won't collapse right away. The entire core banking system, good. We've heard all the optimism. Now we have to look at the other side of the matter, like the International Monetary Fund, IMF, these watchdogs of global finance. They are not so optimistic. They pointed out 5 key weaknesses directly. These 5 weaknesses are institutionally vulnerable borrowers, investment tools that are difficult to cash out, layers upon layers of leverage, assets with opaque valuations. There is also the intricate relationship between them. These 5 things, like a rusty chain, as long as one of the links is broken, it is likely to trigger a chain reaction. Let's look at the first one first. It is also the most fundamental problem. What are the companies that come to borrow money? The answer is their financial health is typically weak. Many are relatively small in scale companies with already high debt levels. Think about it. Once the economy is bad, interest rates rise. Is this kind of company the first to be unable to survive? Let's come back to the valuation issue more troublesome. This passage is very well said. Open market price, I've told you there's a risk, but the valuation on the private credit side. But he also said that this loan is full of value. These two numbers, it can't all be right. What does this mean? Represents the book value of these assets. It's probably just an illusion because there is no public transaction. No one knows how much he is worth. The real losses may have occurred long ago. It's just that it hasn't been revealed yet. Third, layers of leverage. It's a bit like you don't just invest your own money. I even borrowed money from the bank to invest. Want to earn more? That's what these funds are. Not enough investor money. I have to borrow money to invest. This is a good rate of return, but think about it when making money. Amplify, what about when you lose money? Of course, I will pay you back twice as much. The entire system becomes very unstable. This last point, I think it's most worrying. Don't think this shadow market exploded. It has nothing to do with us. Wrong. It is similar to the banking system. We know very closely connected. Current estimates suggest that traditional banks' total exposure possibly as much as $300 billion. It's like there's an invisible water pipe. If the shadow market floods, water will be poured directly into our mainstream financial system. Okay, we heard the pros and cons. Now we finally come to the core question, the trillion-dollar question everyone is asking. These tensions seen in the market right now, is it just a short-term liquidity crisis? Or is it a more terrifying credit crisis? These two are very different. Let me make an analogy. Liquidity crisis, it's like you don't have cash in your wallet, but you know you still have money in your account. It's just that I can't get it out for the time being. But the credit crisis is different. It represents the money in your account or assets in your name. It has become waste paper, not worth anything anymore. Find out which one. It is very, very important, as one expert put it. That's the key point. He said at present this is more like a liquidity issue. It's not a credit issue. But he added later, but if the liquidity problem drags on for too long, it will become a credit problem. You see, this is the scariest place. Today's temporary turnover is not working. Well, if it can't be solved tomorrow, it might really become a complete mess. So having said so much, whether you are an optimist or a pessimist, there is a fact no one can deny it. It's this multi-trillion-dollar market never experienced it once a truly severe and prolonged economic recession. It's like a lab, something that grew up in perfect circumstances. None of us know when the outside world, when the storm really blows, what will happen to it, and this unknown. It is the source of all risks. So this huge shadow market, what is the next step in financial innovation? Make the entire system more efficient. It's one we made with our own hands. The financial bomb that hasn't exploded yet. Answer to this question, I'm afraid it will be decided directly. What the next global economic storm will look like, it is also closely related to your and my future wealth. I think about this question. It deserves continued attention from all of us.